Joined in the studio tonight by Stephen Mayne, a business journalist and shareholder activist. And in our Melbourne studio, Michael Heffernan, investment analyst and advisor with Holst Sharebrokers. Insight invited both the chair of BHP, Don Argus, and its chief executive, Paul Anderson, to join us tonight to put BHP's view, but both declined. Welcome to Insight, gentlemen.
Thanks, Gail.
Michael Heffernan, is it a dud deal?
No, I think actually it's a very good deal because it's going to propel BHP, which has been a largely domestic Australian resources company, into an internationally, globally diversified resources company with assets or commodities or resources which it doesn't have as its mainline area of activity at the moment, when it combines with Billiton, which has great assets in aluminium and nickel in particular, which is what BHP is currently deficient in.
But Michael Heffernan, the question isn't whether the merger is a good idea, but whether the deal is a good deal.
Oh, look, I think this is a question of short-term costs for long-term gains. If BHP believe that by paying a little bit above the odds for an asset now, it can develop those assets, it can leverage those assets to produce much greater gains in the future. That's what I think the balance in question is all about now. There is short-term costs, but the long-term gains, in my opinion, far outweigh those short-term costs.
So, Stephen May, no good deal with lousy terms.
Well, the concept of a dual-listed structure and putting together these two companies is fine, although there's no real overlap in the commodities they're in, so there's not a lot of synergies or cost savings. But the main problem with it is the price, is that BHP's board has sold the company out and there's a transfer of value of about $5.5 billion from BHP shareholders to Billiton shareholders.
That's $2.55 per share for BHP shareholders that's going to Billiton.
That's right. It's effectively a huge premium that BHP is paying to merge with Billiton. Now, normally when you pay a premium, you're doing that to exercise control and so your management can run the whole thing. But BHP's paying a premium and then they're ceding management control because Brian Gilbertson from Billiton is taking over as the global chief executive of the combined group
in 18 months' time.
At the end of 2002. So he's getting the premium. His executives are sharing in a share bonus pool on some measures as high as $140 million, and they get to run the combined show as well. So Billiton shareholders, it's a great deal, but for BHP shareholders, in financial terms, it's a shocker and it should be knocked back.
Well, Michael Heffernan, there's also the problem, it's a related problem that BHP has 70% of the assets and yet it's only going to own 58% of this merged entity. Why is that? Why did that come about?
Well, I would just like to take up a point that Stephen mentioned before getting onto that, Gail, and BHP have not ceded management control at all to Billiton. We have Mr Anderson is going to be managing director until the end of the year 2002. Mr Gilbertson will take over from then. BHP will have 52% or 58% of the voting shares of this combined entity, which gives it effective control over the future direction of this joint venture asset. I mean, I don't think that BHP shareholders have been dudded at all. I mean, paying a 10% premium, as Stephen describes it as a shocker, I wouldn't at all. But I mean, it's almost...
Michael Heffernan, if I could just ask, though those are more the terms of a takeover, you expect to pay a premium when you've got a takeover, but this is a merger.
This gives BHP assets to internationally diversified resources. It gives it access to capital markets beyond its current reach at the moment. It enables it to achieve synergies in terms of administration and access to world capital markets. They're benefits that maybe you can't quantify in a dollar term right now, but by golly, I believe that it's going to bring tremendous benefits to shareholders in BHP in the longer term.
But Stephen Mayne, did it have to be at this price, even in the short term, did it?
Well, it didn't have to be at this price, and that's where the big institutional shareholders in BHP should simply have said no on these terms, go back and renegotiate. And BHP is in a very strong position because Billiton has splurged $6 billion in the past 8 months expanding their portfolio. They have now got an over-geared balance sheet and a whole range of projects in high-risk countries which need to be funded. So they haven't got the money to fund it though, whereas BHP has all of the cash flow but none of the projects. So BHP held all the trump cards in the negotiations. They could have just said, come to this deal on our terms and we'll give you our cash flow to fund your projects, but it's got to be a merger of equals. And somehow the Billiton management team managed to whisper in the ear of the BHP board and come up with a deal which is just patently unfair for BHP shareholders.
Brian Gilbertson has been saying in the last few days that he nearly walked away from the table a couple of times. You don't believe him?
Well, that's just rhetoric. I mean, the Billiton share price has risen more than 20% since this deal was announced, and the BHP share price has gone nowhere. And if you look back over the last 6 weeks or so, the Rio Tinto and the Western Mining share prices have both rocketed because the mining industry worldwide has taken off and all the benefits of the low Australian dollar. This deal has actually put a cap on the BHP share price, and if the shareholders actually rejected it, the price would probably go back to about $25 fairly quickly.
Michael Heffernan, why not?
Absolutely disagree with that today. I mean, if you look at the price of BHP today, it's increased over 70 cents or over 3.5% on the eve of a meeting which clearly shareholders are voting with their pocket that they believe is going to be successful tomorrow, and as I indicated, going to be in the long-term benefit for BHP shareholders. I mean, if Billiton has bought some assets recently, as Stephen has said, they've bought quality assets with a long life. They're low-cost assets in aluminium and nickel in particular. BHP can now get access to those two commodities without having to go and explore for them themselves. And you can't, quantify that and put an exact dollar on it. But as I say, an international diversified commodity base, internationally diversified geographical resources, and access to a much broadened capital base is going to be of immense value, in my opinion, to BHP shareholders. And quibbling about the short-term cost of options to Billiton executives, I think, is Mickey Mouse stuff compared to the benefits in the long term.
But it is indicative, isn't it, Michael Heffernan, of the fact that Billiton thinks it's got a really good deal if it's able to give its executive $14 million each as a bonus for securing such a deal. It does mean to the Australian people, it's a bit of a message, isn't it?
No. Well, no, I wouldn't agree with that at all. I mean, this was in the, as I understand it, in the Articles of Association of Billiton PLC, as it's called. It's really got nothing particularly to do with this merger. And besides that, if that's a liability of Billiton, that was built in anyway to the overall merger price. And paying a 13% premium, as I've said for the third time now, is a small price to pay for the benefits long term.
So do you think this is why the institutional shareholders are voting for it, Stephen Mayne?
No, I think the institutional shareholders are actually in their heart of hearts against this deal, but Perpetual's been the only one that's big enough to stand up and say they're going to vote against it. What you have in Australia is a club of directors, and they're all fairly matey. And basically the BHP chairman and board have worked the institutions very hard to pull this deal through. Now, the classic is the largest Australian shareholder in BHP is Colonial. Colonial is owned by the Commonwealth Bank, okay? The chairman of the Commonwealth Bank is John Ralph. John Ralph is also a director of BHP who has joined the board in unanimously endorsing this deal. So if you're a fund manager at Colonial, are you really going to want to annoy your chairman and vote down a deal that's going to embarrass him and possibly force him to resign from the board? No, you won't. So I think the institutions have acted to protect fellow members of the Australian Directors Club to save them from embarrassment, but in the process they're blowing $5.5 billion in value, which is a huge price to pay to get this deal through, just to expand so that BHP can have access to high-risk countries such as Colombia and Mozambique, which a lot of people wouldn't want to be in the first place.
Michael Heffernan, certainly it's true that the unions and the Commonwealth public sector and the other public sector superannuation funds and a lot of commentators and shareholders have all said that there's been a lot of secrecy, a fair amount of bullying, a lot of very aggressive marketing by BHP executives and the board. Even it's been described as a smoking gun being held to their temples. What do you think of those comments?
Absolutely nonsensical metaphors, I would say, Gail, without a doubt. I mean, we've got institutions here. Stephen's mentioned one institution, one out of the many, many institutions in this country. Only one is voting against it. He's mentioned something about Colonial. I wouldn't agree with that at all. I mean, institutions are strong enough to make their own judgments on the clear, objective facts, irrespective of who might be chairman of whatever board. And as I said, there are numerous institutions which are voting in favour of this merger, and I think you might describe them perhaps as the silent majority compared to the noisy minority which have been given all the front pages of papers over the last month.
Well, I suppose the proof's in the pudding. We'll find out tomorrow when we see what happens at that meeting in Melbourne when BHP shareholders vote one way or the other on the merger. Thank you both very much for joining us tonight on Insight.
Thank you.